It is your money month on BNN Bloomberg, and when you take a look at your finances, the money that comes in, the money that goes out, where does some of it go? Where's a lot of it go? It goes to taxes, doesn't it? This year, because of the pandemic, there are going to be some new considerations when it comes to considering your tax burdens in the spring. Silvia Jacinto joins us now, tax partner at Crowe Soberman, and let's start there, Silvia. There will be some new things, particularly if people avail themselves of government support programs, that they're going to have to get front and center in the next couple of weeks.
That's right. So you may have received some CERB benefits in 2020. Perhaps you started to receive benefits under the simplified EI benefits, or you were a student and you received the Canada Emergency Student Benefit. These benefits that you received are taxable for the 2020 year to the extent that you received them in 2020. For some of the benefits, like the Canada Recovery Benefit, which benefited those individuals who may have been self-employed and did not otherwise qualify for employment insurance, those types of benefits, as well as the sickness benefit if you had to stay home or care for somebody because of COVID, they were subject to a 10% withholding tax. And so you may have paid in some of the tax you will otherwise owe for 2020 if you were receiving those types of benefits that did have tax withholding. The CERB, however, and the Canada Emergency Student Benefit, those were not subject to any tax withholding at source. So any money that you received will be subject to taxation for 2020. So you really need to look at your total income for 2020 pre and during the pandemic to see what level of income you're at. Of course, income above a certain level, federally it's about $13,000, will be subject to tax. So you do have up to about $13,000 that you don't pay tax on. But if you earned more than that, you are looking at potentially a tax bill coming your way.
What is your sense, Silvia, as we go through these things about how difficult it might be? I'm the person who does the taxes in our house every spring, and you know, it's an exercise where you lay everything out, and the beginning of the journey can be pretty muddy, and now we have a few more variables in there. I mean, is there a path of clarity, perhaps, if people are hearing our conversations and, oh my God, what am I going to do?
Well, fortunately, there are some online income tax calculators that you can use as sort of a proxy for what your 2020 tax bill will be. Those are readily available. You can Google Canada Income Tax Calculator, and it'll give you a sense, if you put a number in there, of what you think were your total earnings for 2020, including any benefits that you may have received as a result of COVID-19. That will give you a sense of what your tax liability may be. And therefore, you can prepare and hopefully save up for the tax bill that's going to be due on April 30th of 2021. This also gives you an opportunity. We're still in early February. You have some time to make an RSP contribution, potentially. You can make one on or before March 1st, and that contribution can be deducted on your 2020 tax return. So that may be a way to reduce your tax liability for 2020.
Right, that's an important one that people forget because they think we rolled into a new calendar year. You can still get that contribution in. Some of us,
that's right.
This looks like a personal residence that you're in. It does not look like an office. Even though I've dressed this up, I'm at home as well. There's other things to consider. People working from home, there's new ways to avail yourselves of credit. It's a simpler way.
That's right. So if you were working at home at least 50% or more during 2020 because of the pandemic, there is an opportunity for you as an employee to avail yourself of home office expenses that may not have otherwise been available to you. So when you file your 2020 personal tax return, you're going to fill in a form. It's a T777S form. And this form will give you the opportunity to claim $2 per day that you worked from home, up to a maximum of $400 for the entire 2020 year. And the benefit of the simplified method is that you really don't need to retain any receipts to justify that expense. You just need to claim it, to attest basically that you did work from home at least 50% of the time in order to take that deduction.
Obviously, people who are self-employed as well probably have a better scope of exactly when it comes time to file your taxes, what it all incurs. But what if you incurred a net loss in 2020? What do you need to think about there?
Absolutely. So if you're self-employed, you're going to be reporting business income, and that will include a business loss on your 2020 personal tax return. This may result in a net loss position for you, which may be unique for 2020, but there is an opportunity for you to carry back any net losses that you incurred in 2020 to recover taxes paid in any of the preceding 3 taxation years. So if you did pay tax, you can recover some tax in those years. If you do not have the opportunity to recover tax in those 3 preceding years, and you've already eliminated all of your 2020 tax because you had the loss, you can carry forward the excess loss to be used in any future year up to 20 years.
All right. So that's something important to think about. We know, as I was alluding to before, people can feel overwhelmed when it comes to tax matters, right? And they push them off, they push them off. You had one piece of advice for people. What would it be?
I would say it's a very simple piece of advice. File your taxes on time to the extent that you can. Personal tax returns, if you were employed, are due on April 30th, 2021. We haven't heard of any extensions. I know that for 2020, we did have several extensions because of the pandemic. But try to file by April 30th. If you're self-employed, you have a little extra time. Your tax return is due June 15th, but any taxes owing are due on April 30th, whether you are self-employed or not. And the benefit to filing on time, even if you're expecting a refund or you don't have a tax liability, is that should your return be reassessed in future and there are amounts owing, they will be subject to late filing penalties because you did not file on time. In addition to that, if you expect any GST credits during the year on a quarterly basis, or you qualify for the Canada Child's Benefit, it's better to get your return filed on time, and those payments will be received by you on a more efficient time frame as well.
And of course, don't forget the tax credits that might be available to you. It makes a difference, right?
Absolutely. So you may not think that it makes a difference, but they could add up at the end of the year. So if you incurred significant medical expenses, or you donated a little more in 2020 than you otherwise would in another year, all of those expenditures may qualify for a non-refundable tax credit on your 2020 personal tax return. So it's important to keep track of your medical expenses. If you have students in college or university and they may not otherwise be working and earning any income, up to $5,000 of their tuition credits can be transferred to you as a parent or guardian. So it's important to avail yourself of those credits. There's a Canada Workers Benefit as well. That's relatively a new benefit in the last few years. So again, if you can, Google these benefits for 2020. There are these online calculators. There are simple calculators. There are more detailed calculators. But there is an opportunity for you to do some research and find out what credits are available to you and how can you reduce your taxes to the full extent possible.
All right. Important and useful advice. Silvia, thanks so much for joining us.
You are most welcome. Thanks, Greg. Take care.
You too. Silvia Jacinto, tax partner at Crowe Soberman.